I guess the big question for people is the model's been exceptionally accurate. Like you said, it's tracking like a train. Let's say we get to 285,000, then what happens?
Yeah, well, if it goes to that levels, and by the way, I also think it's more likely that it goes to 250 or 300k levels than 100k, because um, it is consistent with thinking that we're halfway into this cycle. We did 5x from, when Bitcoin was 10k, we're now at 50k plus something. So that's 5x. So the jump to 100k is so small compared
It's
to
nothing.
what we already have. So another 5x takes us there,
Right.
right? So
Right.
yeah. Well, one thing, the 288,000 is an average. So to have that average over the 4-year period, we have to be far above that, because right now we're far below that. So I think actually, if this scenario plays out, that we could see prices of 400, 500,000, and then after that, uh, yeah, a bear market that could go as low as, well, maybe 100 to 200,000 again. So maybe even a little bit below that. But yeah,
So you could see a repeated 80 to 90 or 80, 85% retracement like previous cycles, because obviously in market euphoria, we start to see the it can never go down sort of mentality, the idea of super cycles, the concept that we have an institutional floors. They would never let it drop more than 30 or 40%, but cycles are cycles, right?
that's exactly how I see it. I know it's a big debate at the moment that we're going to see a super cycle, and that now the institutions are in. We will break all models, and there will not be cycles anymore. No bear market, or at least a less deep bear market. But I don't think that's true. I like you said, I think there will be FOMO at the top, and there will be fear after it, because something happens, and the new people that FOMO'd in, they will be scared, and they will sell. And of course, the minus 80% drops are always measured from the very top, right? It's
Correct.
The very top is also an outlier basically in my world. So both the very top and the very bottom are, well, I think less interesting, and it's the average level that's very interesting.
But what's interesting is that my team actually took the top 20 or 30 price predictions that they could find. This was months ago, and averaged them all the way from the bearish people who said 3,000 to the full on moon boys up to 1,000,000, and the average was about 235,000. And there's the old parable of the ox, which says that humans are very bad at making predictions, but in a group, if you average all of the predictions, you actually get very close, and we got to 235.
Wisdom of the crowds. I used to work at a dealing room in my early days of my careers, and there were 400 traders there, mostly foreign exchange, and that's what we did as well. We were just polling everybody and see what the average was, and most of the times that's pretty useful indicator.
So you talked about the idea that when you started looking at Bitcoin, scarcity was the most compelling property for you. It's what attracted you to the asset and what made you use the stock to flow model. Now we're seeing the mainstream adoption of the idea of digital gold, e-gold, gold 2.0, however you want to skin it. What made you so interested in it that early and really lock in on that attribute of Bitcoin?
Yeah, because it's the one thing that Satoshi Nakamoto always mentioned, and basically the reason why he invented Bitcoin, and all the people before him were trying to make something like Bitcoin. It was the debasement of currencies, the debasement of the dollar. Now, that was the main cause of the main problem that Satoshi Nakamoto saw, and that Bitcoin was the solution for. Because as long as there has been fiat money and governments, even as far back as the Romans, the governments debased their money and stole money from the population. basically. So the denarius had a silver content of 95% or 90%, but it went down all the way to 10% or something, and that coincided with the decline and fall of the Roman Empire, of course. So the birth of Bitcoin in 2008, October 2008, when the white paper appeared, that was, of course, the top of the global financial crisis, 45 days after Lehman Brothers default, and the exact week when it was published by the U.S. government that they would save all the banks and would be engaged in quantitative easing, which is short for debasement. I think if Satoshi would see today what the government is doing after the COVID crisis with the trillions and trillions of dollars in stimulus and quantitative easing, he would have laughed and seen, yeah, well, this is exactly what Bitcoin is made for, and you see it playing out beautifully. So it's for me, it was clear from the start, and Satoshi talked about it oftenly. So listeners who don't know this, all Satoshi's emails and forum posts are available in a book, but also on nakamotoinstitute.org. You can read it. It's like a thriller.
It's amazing.
And that's crazy. That guy was so smart.